There are some new tax laws to be aware of beginning January 1st, and if you want to take the bite out of taxes this year, it might take a little planning. Emmett Miller brings us some tax tips.
Maybe you can drive my car.
For instance, car donations. You can't just turn it over and write off the Blue Book value anymore.
Basically, you're not allowed to deduct any more than the charity is ultimately able to sell the car for.
Last year, a government audit found that many donated cars were sold at auction for only a few $100s. Donors, meanwhile, claimed thousands on their tax returns. Now, the IRS wants to see proof of the sales price. CPA Ernest F says it's a trend.
Because people have been doing things like donating old underwear and stuff that has virtually no value, anything over about $500 is going to need an appraisal shortly. So non-cash contributions is going to get a little nasty. The January schedule is now final.
Ernest has been president of the California CPA Society LA chapter for 20 years now. This group was started during the war in the early 40s, and they've met every year since. We decided to pick their brain for year-end tax tips. CPA Alan Rosen.
Those who are able to, giving $12,000 gift to whoever and however many people they may wish.
They won't get taxed on it, and it's a great way to hand down wealth to your heirs. CPA Marty Rosenfeld.
Well, there's been some increases in the retirement benefits and educational benefits.
For example, in addition to a $12,000 gift, you can pay educational benefits for an heir if you pay the school directly. Same goes for medical. If you're over 50, the IRS will allow you to play catch-up in your IRA. This year, you can donate an extra $5,000 on top of your regular contributions. CPA Bill Crossan has advice for folks in the stock market who also want to give to charity.
You don't want to sell the stock and give the cash, because if the stock's gone up in value and you sell it, you're going to pay a capital gains tax on that stock. Now, what you should do is give the stock. That way you get a higher value charitable contribution because the stock has gone up in value.
A few more tax changes for this year. Small business owners over 50 will be able to contribute $220,000 into a pension plan, or up to 50% of their annual compensation. The marriage tax penalty is still alive and well, even though this year California is allowing domestic partners to file joint returns, even though the federal government won't.
The mechanics of putting together separate returns for the federal and a joint return for state have not been issued by the state yet, and everybody's scratching their heads trying to figure out how the heck they're going to do it.
Emmett Miller, KTLA News.